Good morning, good afternoon, good evening, everyone. Welcome back to the breakfast show. I'm saying good morning because at least we have one positive thing, and that's just me being here for a therapy session. So, we have had quite a bloody week. Actually, it's not even a bloody week because since the start of October, a lot of these high flying stocks have retraced down 20%, 30%, some of them even down 40, 50% plus since the start of October. We're going to look at a couple of names, and you're going to see that they're all following the same pattern. Most of them peaked in October, most of them have come down exactly at the same time. Now, fortunately for us, we've just had, well, next week we have the big name Nvidia on Wednesday, which I do think can be a crucial date when Nvidia reports. If the numbers are extremely good, if the comments from Jensen on the call are extremely good, maybe the whole sentiment around this investment cycle AI can change. But up until now, what we've seen is that good companies reported good quarters, some good guidance as well, and bad companies got crushed. It's usually a good thing. Now, what is happening right now? Why is the market continuing to go down despite the government shutdown ending or ended, right? Because previously we were like, okay, there's a government shutdown going on, that's why the market is down. But now that that's over, market still continues to go down. So what the heck is going on here? Well, there are a couple of reasons, in my opinion, that could explain it. One of those reasons is this. So let me share the current expectations. This is the probability of another 25 basis points cut in December that currently sits at 53.4%. Yesterday, that was 50-50. 1 week ago, 66.9%, and a month ago, 94.4%. So it seems like the market is not really sure that we're going to get another rate cut in December. Now, of course, if you remember, previously the expectations were also for only 2 rate cuts. Then it has been made quite clear that, okay, we're going to get 3. Now we had 2, maybe 3. It's basically a flip of the coin at the moment. Also, we are not getting a CPI report. We're not getting a jobs data either. That's not great. Then you've got the AI bubble stories popping up every single day right now because we're not at all-time highs anymore. We have come crashing down. And so print, right? Make sure that people click on these titles so we can generate more money. You put all of that together, and that's what you're getting right now, bad sentiment. And there's one thing that the market hates more than us making money, that's uncertainty. The market doesn't like uncertainty. It doesn't like when there are too many questions, right? And so we're getting something like this. We're getting something like this. This was yesterday. This was yesterday. If you look at the last week, it's a bit better. It's a bit better, but still not great. If you look at the last month's performance, it's about the same, right? You still have some big names. Meta down close to 14%, Oracle down close to 30%, Netflix 5. But over the past month, you see Nvidia is basically flat, Apple is still up 10%, Google 15.4%, Tesla is down 5.8, AMD is still up 13% over the past month. Amazon still up 10%, Eli Lilly still up 24% over the past month. But yes, when we're talking about specifically high beta names, right, the AI growth stocks, or yeah, the smaller AI growth stocks, shall I say, yes, those are probably down 20%, 30% or more. Right now, if we look at pre-market, it's expected to be another pretty red day. Nvidia down 3%. All of this is pre-market, by the way. All of this is pre-market. Nvidia down 3%, Google 2.5%, Oracle another 2.7, Palantir close to 5, CrowdStrike 2.5, Meta 2, which means it's under $600 right now. AMD down 3.5, Broadcom 2.7, Tesla's down another 4.6%, Intel 4%. So it seems like right now we are going to prepare ourselves for another bloody Friday. Let me actually, before I continue, touch on this right here. The Burry tweets don't help. Yeah, they don't help, but then again, the guy has been wrong more times than he has been right. I'm pretty sure, I tweeted this out yesterday, I'm pretty sure that he's surprised that the market pays so much attention to what he does. The guy has had one great move. They made a movie about it. And since then, nothing. And yet we keep bringing this guy up. Okay, maybe he'll come out with a Patreon, Substack subscription, OnlyFans. Who knows, right? Who knows? Michael Burry shorted at the top. Another amazing call from this dude. Well, it's first of all, we don't even know if he still has that position because the 13F show us what he did 3 months before. Well, in the 3-month period before, could have sold already, could not, could still be making quite a lot of money. Also, the amount, since those are call options, or so since those are options, people were saying, oh, it's $1 billion short. I don't know if we can know exactly what the number is. Plus, another amazing call from this dude. You know what they say about broken clocks, right? You can be right twice a day. The guy last time he tweeted sell, the S&P went up 52% or so. So yeah. He's not the kind of guy who sold early. Oh, he is definitely the kind of guy who sold early. He's definitely the kind of guy who sold early. You just have to look at his track record. And it's not a great one, let me tell you that. Because if it was a great one, he would not have to close out his earlier positions and close out his fund as well a long time ago, which right now he's not really closing down the fund today. He's just putting it private, so doesn't get scrutinized that much. Plus, yeah, if you look at his portfolio compared to, well, without the options, because again, with the options you don't know exactly how much. But if we look at his portfolio right here, portfolio value last time it was recorded $55 million. You would think that such a genius, right, like Michael Burry, who predicted the 2008 crisis and predicted the 50 out of the 2 last crashes, would have had a portfolio value a bit more than $55 million. Because if you compare this to I'll go to the extreme right now. A Pat Dorsey, for example. Pat Dorsey sits at $1.1 billion. Are people paying attention to Pat Dorsey as much as they pay attention to Michael Burry? Probably not, right? Probably not. I'll go to an even more extreme one, Howard Marks, although I do believe that Brookfield acquired all of Oaktree right now, $4.7 billion. Are we paying attention that much to this? Probably not. Maybe a little bit more than Pat Dorsey. David Tepper, we actually have Q3 figures for him, $7.3 billion, quite bigger than Michael Burry. Is he making all of the headlines? I don't think so either. By the way, David Tepper, as you might remember, 2 quarters ago, he added an insane amount to United Health. Then I tweeted out, okay, this is cute. I think him, Burry, and Buffett bought United Health in Q2. And I tweeted out and I said, okay, cute, but they might also be selling it already since we get the 13Fs after the quarter is over. They might be selling it. People are saying, oh, you're crazy. They're not buying it for 1 quarter. No, they're not buying it for 1 quarter? Interesting, because if we look at United Health for David Tepper, he reduced it by 91.69%. So I guess they do. I guess they do. The same with Warren Buffett. Well, Berkshire, right? They bought Ulta. Where is it? Berkshire Hathaway. We're still waiting for the Q3 one. But remember, where is it? Ulta Beauty. Ulta Beauty was the same thing. They bought Ulta Beauty, right? Where is it? Q2? Yeah, Q2 2024, they bought Ulta Beauty. A quarter later, they sold 96% of it. 2 quarters later, completely sold out. So again, yes, these names do go in and out of positions, it seems. They do. They do. And so we're going to see the same thing right now with probably some others. But we're still waiting. A lot of them are still here in Q2. Probably over the next couple of days, we're going to get way more information. Right here, you see as well, Michael Burry also completely sold out of United Health, which again, I am not that surprised. Let's see if we've got some actually interesting names here for Q3 that already reported, other than David Tepper. Nothing, but let's see what this guy did. So he did buy quite a lot last quarter. Again, important to note that all of this is last quarter. They just report it now. He bought AMD. Ooh, Fiserv. That must have hurt. American Airlines, Truist, KeyCorp, Citizen, and then a couple of other names. Interesting pick here. Probably bought here towards the end of the quarter when it all went down. He did reduce again a lot of the big tech companies: Amazon, Google, Meta, Microsoft, Lam Research, ASML, Alibaba, Pinduoduo, JD, Uber, and he completely sold out of Intel, Oracle, and this thing right here. Let's see. So Alibaba is still number 1 by far for David Tepper, by far, 15.6%. Amazon 7.4%, Whirlpool Corp 5.8%. Then we have Nvidia at 4.8%. So the big names here, Google, Nvidia, Amazon, Baba, are still at the top, of his pretty big portfolio. QNC, thank you for a super chat. 3 days ago, we prayed to buy Nebius under 100. You are 100% correct. I'll show you actually Nebius right now. So Nebius yesterday touched the 100-day. Today, well, right now, pre-market is down another 8.5%. Iron another 10%. Applied Digital another 11%. So next stop is probably going to be around $75. Is going to be half of the gap up move from the Microsoft news, and the previous stop back here in August. The 200-day moving average sits at around $58. Are we going to go this low? I don't know, but Right now, next stop is probably right here, $75. We're currently at $81 pre-market. As for iron, you can see the McDonald's pattern. Definitely not loving this, right? Not great, not great. This one here, we tried to stay here at that double bottom here, although here you have maybe a type of double top with RSI a bit lower, which is not great either. And now it seems like this one is also going lower pre-market. Next stop maybe here around the 100-day moving average of $35 per share. As for Applied Digital, coming all the way back to the 100-day at around $20 or so. Full reversal, even after the big push. Full reversal here for Applied Digital. The only name on my watch list right now, which is green, is of course New Holdings, because they reported yesterday. We're going to go over maybe the numbers in a bit. Great quarter. Again, not surprised. New is an excellent company. Excellent company. And yeah, they are up 1.6. If the market was green, they would probably be up way more than that. Way more than that. But we are going to have a look at that in a bit. I do want to show you some other things here. So from Subutrade here on X, to look at what the S&P and the Nasdaq have done after a shutdown ended. So what do we see right here is the following thing. One day after the shutdown ended, well, first of all, forget the one day. As you can see, we have 1, 2, 3, 4, 5, 6, 7, 8. 8 times, 8 data points we can work with right now when this has ended. You can see that up to 4 days later, 50% of the time the market was green or red, but on average, the S&P is down. Okay, on average, the S&P is down up until 4 days later. Then we have 63% of the time S&P was green. Afterwards, 1 week later, it's again a 50-50, basically toss of the coin. Okay, but on average, you're down, which makes sense if you look at what has happened over the last couple of days. And then afterwards, the odds are definitely getting better. 2 weeks later, a month later, 2 months later, over 75% of the time we are green, and on average, we are going to be up. As for the Nasdaq, it's about the same thing here. Short term, first week, not that great. Next week, 2 weeks, a month later, 2 months later, things start to get a little bit better, which, again, for now, this is what is happening right now. Government shutdown has ended. Not great. We've had one green day. When was it? Can't even remember. But on average, we are of course down. If we look further out, we see the following thing. And the following thing is, of course, great for long-term investors. S&P over the longer term, 1 month, 2 months, 3 months, 6 months, 9 months, a year later, up most of the time, and on average up significantly. As for the Nasdaq 100, same thing here. A month later is the worst odds for us. As we move further down, the odds are getting better, and on average, here the Nasdaq is up significantly. I mean, 6 months later, you're up 21.2%, then 23.4%, then almost 30% a year later. Maybe it's not going to happen with, our case right now in 2025. Maybe it's going to be like 2018. It's possible. It's definitely possible. But again, if we're looking here at the data, if looking here at the odds are in the favor of those that can look past a week, a month. So again, I don't know. I love these types of comments. Let's see the portfolio. You love showing it when it's up. I show it every Sunday, my guy. Every Sunday, when it's up or down, it's every Sunday. So no need to try and troll. Every Sunday, you see the portfolio, whether it's up or down. So if you want, you can join the Sunday portfolio video. And actually, I showed you a screenshot yesterday in the community post. It's red, of course. You think I have something to hide? I show it every Sunday. There's nothing to hide. People actually follow the portfolio as well. You can see it every single day if you use the link. Anyways, S&P 500 on track for its worst November since 2008. Bum, bum, bum. Are we going to see another 2008 scenario or not? I don't know. But S&P right now, November, not great. Not great. Although, as you can see, over the past, over 15 years here, November has been a pretty good month. September, not that great, although we had a very good September, right? We had a September where we're up 3.5%, an October where we were up 2.3%, and now in November where we're currently probably going to be trending towards down 2% or so. But in previous years, you can see that September, October were not that great of, months. This time we got lucky for the other 2 months. And then, Then again, if you look at what happened since May, June, July, August, September, October, 6 consecutive months of us going up and up and up and up. Okay, then we're getting here in November where we're going to be red. Fine. Then let's see what happens in December. December is also usually, unless you are in 2018. 2018 was also the end of the year with the first trade war. December is usually an okay month, right? The Christmas rally, end of year, etc., etc. You could use the tax loss harvesting excuse for what's happening right now, which, okay, fine. Could be a reason, but this is basically what has happened before. And you can make your own conclusions if you think things are going to happen again. Now, as always, since the market is down, we are usually going back to some Peter Lynch, how do you call it? Lore, maybe lore. Anyways, let's have a listen to that one. See if the volume should be up.
You should study history, and history is the important thing you learn from. What you learn from history is the market goes down. It goes down a lot. The math is simple. There's been 93 years a century. This is easy to do. The market's had 50 declines of 10% or more. So 50 declines in 93 years. About once every 2 years, the market falls 10%. We call that a correction. That means that's a euphemism for losing a lot of money rapidly, but we call it a correction. And so 50 declines in 93 years, about once every 2 years, the market falls 10%. Of those 50 declines, 15 have been 25% or more. That's known as a bear market. We've had 15 declines in 93 years. So every 6 years, the market's going to have a 25% decline. That's all you need to know. You need to know the market's going to go down sometime. If you're not ready for that, you shouldn't own stocks. And it's good when it happens. If you like a stock at 14 and it goes to 6, that's great. You understand the company, you look at the balance sheet and they're doing fine, and you're hoping to get to 22 with it. 14 to 22 is terrific. 6 to 22 is exceptional. So you take advantage of these declines. They're going to happen. No one knows when they're going to happen. It would be people tell you about it after the fact that they predicted it, but they predicted it 53 times. And so you can take advantage of the volatility in the market if you understand what you own. So I think that's the key to element. Another key element is that you have plenty of time. People are in an unbelievable rush to buy a stock. I'll give you an example of a well-known company. Walmart went public in October of 1970. 1970 went public. Already had a great record. It had 15 years performance, great balance sheet. You could have waited 10 years saying you're a very conservative investor. You're not sure this Walmart can make it. You want to check. You see them operate in small towns. You're afraid they can only make it in 7 or 8 states. You want to wait till they go to more states. You keep waiting. You could have bought Walmart 10 years after they went public and made 35 times your money. If you bought it when they went public, you would have made 500 times your money, but you could have waited 10 years after Walmart went public and made over 30 times your money.
So, Peter Lynch, the GOAT for me, the GOAT. And this is just one of those clips. The whole video, especially in this moment right here, is excellent. Now, of course, in the short term, we don't know what will happen. Right? If we go back a month ago, did we know that stocks would be down quite a lot? Actually, let me now show you the. Right, if we go back a month ago, let's take. Google might not be a good example. No, Google is definitely not a good. It's definitely not a good example here. Yeah, but let's take Oscar, because I've seen a couple of comments about Oscar here. Oscar is down significantly. There's no hiding that. Oscar is now down 43% since the peak. 43% since the peak, and let's call it 30% since they reported earnings, right? Remember, they reported earnings, stock went up, didn't really hold, and then we went all the way back down. Also, ACA subsidies might not be extended. There is just a vote in December, and we'll see what happens with that. And that's what I said. I still hold it, and I still very bullish on the company, but I'd say I'm not adding yet. I'm looking for more information. Right now, still not getting more information, but at least if I want, I can buy it at a, let's say, price where it seems to have bottomed previously. Again, the information is still not out there. We'll still have to wait a month or so. But on Oscar, some people will say, oh, we knew it was going to come down. Did you? Or did you assume that maybe it might come down? Because after the last earnings, right, the earnings were quite good. Guidance was still good. Their plan for 2026, good. That's why we've seen a small, let's say, pump on that same day. But the overall market went down. Government shutdown, ACA subsidies, yes, enhanced subsidies. That didn't go according to plan. They anyways have planned for 2026 to raise prices to tackle all of these issues. But okay, Oscar went down. Could we have predicted that it came down 30%? No, we could not. If we go and look at one of the other, in my opinion, quality names out there, here as well, a SoFi. SoFi yesterday also touched that 50-day moving average. Right now, actually yesterday was a crazy day for SoFi. I think one of the worst for the stock, down 11% or so. Right now back to $27. Could we have predicted this after another amazing quarter by SoFi? Guidance was raised. No, you cannot predict. Or maybe if you did predict it, then I'm pretty sure that you've been saying that SoFi will crash for the last 6 months, 12 months or so. But fine, broken clocks and all of that. But you see great companies that are trading for less right now. Again, the beauty of the earnings season is that we just had a look at the company's financials. We listened to the guidance with SoFi specifically and with a lot of other companies right now as well. We already have some analyst conferences going on, so we get even more information. I think yesterday or 2 days ago, PayPal had one as well. They shared some useful information. PayPal World had its first transaction yesterday, apparently. It's very good news to know. But can you predict this? No. What you can do is look at a business, see that you like the business, see that the business performs well, and you just go and acquire more of those shares if you feel comfortable. Palantir, another story here, very, very expensive stock, insane execution. But here as well, yes, it came down. It came down here at the start of November. Came down around, what is it right now, the retracement? Also 20%. If we look at, one of the higher flying names right now. And Bender, thank you for the super chat. Really appreciate it. And thank you everyone for joining this therapy session. Don't like to do it, but we would love to have live streams where everything goes up and it's green, just like the last 6 months. But if we want to be in a healthy environment in the stock market, then these things are going to happen. If you want to really be in a dot-com bubble environment, then these things never happen. Stocks will only go up. Stocks will only go up for a long, long period of time. Retracements, especially retracements of bad stocks that have just gone up significantly, are good. Are good for the health of the overall stock market. Now, another specific case here is, of course, the CoreWeaves, the Applied Digitals, the Irons, the Nebius, the Ciphers, or whatever, all of these previous Ethereum or Bitcoin miners turning into AI cloud players, although Nebius is not really a previous miner. But here as well, we have CoreWeave, although CoreWeave is a specific name because it also went public earlier this year. So we've got all of it. We have the lockup period expiring and all of that. But CoreWeave also is a stock where, well, you could say start of October, it dropped. It's now down 52%. It's now down 52%. Quite a retracement for CoreWeave. Quite a retracement. Of course, the big hit started around, well, the end of October and really accelerated when we started hearing about, well, AI monetization, GPU depreciations, etc. Sam Altman talking, not really answering a question. And then, well, CoreWeave's own report where they said that, yeah, Q4 is going to be a bit lower, full year 25 revenues a bit lower because of delays of one of their partners. Backlog is still very, very big, $55 billion or so in backlog. Still making deals. But yeah, this is basically what has happened with CoreWeave more recently. So remember, since the start of October, down 50%. If we go and look at Nebius, since the start of October, again, all of them are following the same pattern. Since the start of October, down around 42%. With Nebius, okay, you could say, okay, more recently, the earnings report, maybe a small revenue miss. But other than that, it's more on the industry and the sector than it is on Nebius. But what I want, actually, maybe I'll show you the week, because the weekly maybe shows it better. Yeah, the weekly shows it better. So if you look here on a weekly, you can clearly see that all of these names basically topped at the same point, right? Start of October for CoreWeave, start of October for Nebius. If you look at Iron, I think the double top here, yeah, can say start of October, although Iron did go a little bit higher at the start of November. So since the start of November, Iron is now down also 42%. If you look at Applied Digital, same thing here. It's funny, but they all follow each other, right? They all follow each other, not because every business does exactly the same thing, it's just the sector. Same thing here. Since the start of October, down 48.5%. I'm pretty sure we can do the same thing for the other names. Or this one, Cypher follows Iron, it seems. Start of November, also down 45%. What other names? What other names are there in this category? Not Mara. What is the other one? Bitfarm? Bitfarm. Let's see where that. Okay, this one is as well. Start of October, topped, down 63%. 63%. So as you can see, all of these companies, while all of these companies are a bit different, all of these companies are being put in the same basket. And as you can clearly see from the last 5 minutes here, it doesn't matter if one company performs or not. It's a sector, and that sector topped at the start of October. And now the market is like, you know what? You've gone up 600%, 500%, 300% over the past couple of months. Chill out a little bit. We're bringing you down. Okay, that's why all of these names are down between 40 to 60%. But it is important to note that despite the retracement, if you were one of the lucky ones and you bought, let's say, Bitfarm, when was it? Back in June, you are still up to 100%, right? If you bought Nebius, also, or maybe April. Okay, if you bought in April, then you're still up significantly. You're up 300%. But let's say you bought it here. Also, start of June, you're still up 68%. That's the thing. Huge retracement over the past month and a half or so. But all of these names are still significantly outperforming the market, significantly outperforming the market. That's this group. That's this group of names. We'll talk about specifics if you have some questions later about what I'm doing with Nebius and CoreWeave and Iron and stuff like that. If we look at, well, one of the names where I'm not mad at all that it goes down, the quantum names. Right? The quantum names are suddenly not that popular anymore. But here as well, you can see start of October, boom, down 58% for Rigetti. Not that surprised because it's like a multi-billion-dollar company with generating pennies. IonQ, same story here. Start of October, it's the second week of October, also down 49%. The other quantum computing, previously beverage selling company, start of October, well, end of November in this case, but let's call it the same. It's about the same, also down 63%. You are starting to see what's happened. You're starting to see what's happened. And what's happened is that a lot of these names, again, the names that have gone up 100, 200, 300, 600% over a 6-month period are coming down drastically. Why is that? Why is that? Well, one, expensive as hell, doesn't make any sense, overvalued, tens of billions of dollars in market cap, barely any revenue. Okay. Second of all, people that own it because it only goes up. And so when it goes down, well, when it goes down quite quickly because you have a lot of people that own a name, as not just for the quantum computing names, it's for the other names out there as well. When you buy things and you don't know why you're owning it, when it goes up, you're not asking questions. When it goes down, you are definitely going to ask a lot of questions. And the first thing a lot of people do is like, why is this down? This doesn't make any sense. I don't even know what it does. I'm out. And then the ball starts rolling, and that's why you see names like this, highly speculative names that have been flying sky high, down 40, 50, 60% or so. The question is, where is the bottom? Hard to say for, yeah, correct. Hard to say for companies that don't have no profits, but in this case, it's companies that also don't have any revenue or barely any revenue as well. That's the thing. Because profits, there are plenty of companies, great companies that don't have profits at first, but if there's a path to profitability and then they execute and then you see the profit coming, then it's fine. David, we're not bringing you down. We are trying to bring you up. Well, we're trying to bring everything up. Morale and stocks as well. But yeah, if we look at the S&P, again, I don't like to use this example, but for the sake of it, if you look at the S&P, we're down now, what is it? 2.6%. Maybe we're going to be down 3% after today. It's possible. But that also means that we're still up 38% from the bottom in April. Okay, fine. Maybe April was an overreaction. So if we go back to before April, before the crash, we are still up 9.6% for the S&P. Again, I know I don't like to use this example because we're not everybody's buying the S&P. You're buying specific companies. And as I've shown you, specific companies are down significantly more. NASDAQ is already now down over 6% since the end of October. I repeat, NASDAQ 100 already down more than 6% since the start of October. If you want to go revisit a moving average here for the NASDAQ on the weekly, that's here at around 22,100. But if we go and look at the daily, we are now under the 50-day moving average. The next one on the daily is, let's see, another 2% or so, another 2% lower for the NASDAQ. Previously, Previously, the 50-day was a point where we did rebound. August, September, start of October, start of November, and now we are under it. So we're broken under the 50-day moving average for the Nasdaq 100. As for the S&P, we are still just above it. We're still just above it. So we'll see. So we'll see what happens with the S&P. If again the 50-day is one of those where we can get a little rebound here. Trying to look at, if you want quantum, just buy Google. I agree. If you want quantum, just buy the big ones. Just buy the big ones. Because they have the quantum exposure, and that's good enough. Even IBM, Intel, and stuff like that, it's good enough. Wealth is only built when you hold your winners. Correct. I agree. Hold your winners days like today, or days like today, maybe weeks like what we're having right now. It's definitely not, Amazon is going to fill that earnings gap. Interesting. Just a second. Careful with any decisions today. The Monday effect. Monday effect? We're Friday. Or is Monday the day where things go even worse? Okay, let's see. We still have some time until the market opens. Okay, so some specific names. If you wanna, I asked Jose if he wants to join the therapy session today, but he's in his own therapy right now. Any specific names that you want me to look at? Zeta. Let's see Zeta. Zeta is also down. Wow. Zeta is down another 5% pre-market. Again, this is I know I sound like a broken record, but it's maybe a good broken record. It's better than the Michael Burry broken clock. But Zeta is again another company that reported great earnings, much better than expected. It's really not that expensive. I personally don't own it. I've covered Zeta at $12 or so. It went up, it went down, it went up. It's one of those very volatile names, as you can clearly see. But here, after earnings, it went up for good reasons. It went up for fundamentally good reasons. Now, it's getting crushed. Yesterday, it was down 9%. Pre-market is down another 5%. Again, it's pre-market. We'll see what happens when the market opens. But did something change with Zeta over the past couple of days? Did the business suddenly become a worse business over the past week? No, it didn't. So yeah, Zeta. How convinced are you that Nebius and Iron will reach all-time highs again? As you know, I own a lot more of Nebius than I do Iron and I do CoreWeave. How convinced am I? Well, I would be very stupid if I was not convinced that Nebius would be worth more than $140 in the future, right? So I am convinced this is going to happen. With Iron, execution is key. We've just had a Microsoft deal announcement, maybe the first of many, but with Iron as well. You still need an insane amount of GPUs to come online and for them to actually generate more than, what was it, $7 million in AI cloud revenue, right? To reach that $500 million in ARR by Q1, you need the revenue to start showing up. Will it ever go back to $75? Yes, I think so. Because currently, over the past X amount of quarters, execution has been very well. If this was a company that has seen its stock go up significantly, but execution has been crappy, management makes things up, then I would say no. You will not be seeing all-time highs again. But if it's a company that, executes, business is trending in the right direction, again, with Iron, it's a bit different here because they are also converting right? ASICs to GPUs. But if we're going to start to see suddenly, okay, AI cloud revenue is growing significantly, they are hitting their milestones, they are getting more contracts, then yes, it's just, again, a matter of when and not a matter of if. CoreWeave is another one of those. CoreWeave is still the biggest name out there. It's still the biggest name. It's still the let's say, best friend for OpenAI and NVIDIA out of the other names. I know some people don't like CoreWeave, but CoreWeave in this whole ecosystem, you might say yes, in this whole circle jerk of revenue circulation, CoreWeave is still a very big name. Now, the problem with CoreWeave is, yes, they are the ones where they said, oh, we have seen a delay because of one of our partners. Some people say it's because of Core Scientific, but we'll see. We don't really have a specific name calling here. But if they execute, and if that $55 billion in backlog does come online from today up until, what was it? Up to 4 years and a bit, 60% of it is 2 to 4 years or 2 to 5 years or so. 60% of that $55 billion backlog. So yes, I do believe it, but it won't happen tomorrow. That's the difference between what I'm saying and what a lot of, let's say, Uber bulls are saying. Not Uber the stock, but Uber the German word. Is follow the business fundamentals, follow the track record of the company, and you'll sleep better at night. You'll sleep much better at night. And again, I admit it. I own all three. I don't like to see it being down 50% over the past month and a half. But then again, I'm still up considerably on Iron and on Nebius. With CoreWeave, I'm down now a little bit. Still, my average is $94. Adobe, again, the beauty with an Adobe and a PayPal is that when the market goes up, it doesn't really go up. And when the market goes down, it doesn't really go down that much either. But it is still here at around $333. My comments about Adobe are still the same as before. Very cheap, undervalued company. Theo, good. So what the F is needed to change the sentiment? I'm holding option calls. Yeah, okay. You see, if you hold option calls for Nebius and Arista ending next Friday and you're down 80%, unfortunately, I think you are going to still be down by next Friday, even if the market goes up. Unless these stocks suddenly doubled, right? Unless these stocks suddenly double by next Friday. This is the thing with short-term options is it's a gamble. It's a gamble. Of course, I don't know when you bought these options, but maybe you bought these options where things were going in the right direction, right? And now in a matter of a month, you're down completely. It's the same thing that happened with me, for example, with Pagaya. Pagaya, although my options were expiring January. With Pagaya, I bought it because the stock was down significantly. I saw the business doing very well, and my bet was that the stock would go up after earnings, and it would go up above the strike price. Unfortunately for me, my thesis was correct. The timing was not. Thesis was correct. The problem was that the stock went down more before the earnings. The earnings were very good. Stock did pop. But again, if the stock popped the way it did, but we were at $30 going into the earnings report, I would have probably made money. As you know, I posted it yesterday. I took my losses of my options, converted them to shares. Well, for what was worth, what was left from those options, I converted them to shares because, again, the thesis was right. The timing was not. You take the loss and you move on. Zeta or Rubrik, if you have to pick one. Well, I'm biased since I own Rubrik, so I'd say Rubrik. I bought Meta. What was it? I bought more Meta 2 days ago or a day ago. No, 2 days ago. I bought more Meta 2 days ago in the public portfolio and bought last week as well. Probably around the same prices. What was it? Yeah, no. So yesterday. So today it's a bit less. Today it's at 601. But yeah, you see Meta. Meta is one of those names where it's not really a speculative name, although some people think it is. It's still an insanely profitable business with a return on invested capital of around, what was it, 30? I still think around 30 or maybe high 20s, whatever. It's one of those, someone said it's one of those 2022 moments. I don't know if it's that drastic, like the end of 2022 for Meta and for a lot of the names. But Meta is one of those, big tech companies. It's the cheapest of the Max 7 right now, I think. It's the cheapest of the Max 7. Meta has also seen a huge retracement. I won't go, let's just stay here. September, down 23.8%. Will I add more? Depending, I wouldn't mind. But maybe I'll just accumulate more of the smaller positions that I have right now. Nova, I don't know that company. I thought you meant Nvidia, but Nvidia does report next week. Oracle is another one of those names. We've spoken about this with Jose as well. See, Oracle, full retracement from the huge earnings pump, right? That huge RPO. Market was like, whoa, mind-blowing stuff. And now we're back here, down 38% for Oracle. Mind-blowing stuff, actually, we don't believe it, right? This is literally that. Mind-blowing stuff, we go up, we don't actually believe it. We go back down, back to the 200-day moving average for Oracle. So could be a support area right now. Stock is also oversold. Same with Meta, by the way. Same with Meta. As for the Greenbird, I know some people don't like to talk about it, but I know a lot of people that own it, myself included. Duolingo here is extremely oversold. I said overbought, oversold before. Still extremely oversold right now. I could be adding here and reducing my average significantly, but like I said previously, I already have too much money into that position, and I still have that question mark. You are going for more users, and just hurt my my elbow. You know, when you touch that nerve on your elbow, just that tiny spot. What was I saying? Yeah, they're going after the users, and then monetization should follow later down the line, right? Monetization should follow. If by the way, if I missed some of your comments, just repeat it, because it's going to be crazy during this therapy session, but that's fine. So just repeat the name later. Duolingo is one of those names where, okay, you know what? It's down a lot. Fine. Still a good business, margin-wise, daily active users, monthly active users, paid subscribers, and all of that. But when you're starting to change now a strategy, when you're going to your investment cycle, of course, as an investor, I'd like to see how it works out. Because now they're going after, okay, we want to increase our user base and focus a bit less on monetization. Of course, Wall Street hates that, right? But if it works out, then it's great, because then you'll have a larger user base that you can monetize. And we've seen that the monetization strategy works. Otherwise, the company would not be a great company right now with regards to their margins and profitability as well. So for now, this one for me is on hold. You want to say, yeah, but what? You're not buying at 183, but you will be buying at 240? Yes, because at 240, I might have my answers, and I'm willing to pay for it. That's completely fine. For me, it makes sense. For me, it makes sense. Wall Street hates. Yeah, of course, Wall Street hates investment cycles because it hates uncertainty. It does not know if the investment cycle is going to be successful, right? Wall Street prefers where the company's expenses are flat or coming down, and all the rest goes up and to the right. They don't like it when suddenly the expenses go up. Profitability and revenue can also continue to go up, but they don't know how much the impact is going to be on the future revenue profits of the company. That's true. That's true. Cheaper can be cheaper. Yes, of course. Cheaper can be cheaper. This is also one of those in one of those Peter Lynch uh, pitches as well. Lower can go lower, right? When stock A, let's use SMCI here, right? If you put $50,000 on SMCI at $60, and I put $50,000 on SMCI at $34, if it goes to zero, who loses more, right? Both of us are going to lose $50,000. Doesn't matter if one is already down 50% or so when I start to buy it. Cheaper can be cheaper, lower, well, cheap can be cheaper, lower can go even lower. I'm not saying SMCI is going to zero, it's just an extreme example here because I'm putting up SMCI. This one is also, by the way, oversold on the daily. Back at $34. Back at $34. We did go lower previously, but then again, this was in April, so a lot of things were going on right now. Right then, sorry. Now as well. Now a lot of things are going on. It did go down more under the 200-day moving average after the last earnings report, where again we knew what was going to happen, right? We knew what was going to happen. Makes sense. Got the preliminary earnings a couple of weeks before, so let's see. We do have 2 minutes left. 2 minutes left until cheap go cheaper, go bankrupt. Yeah, for some names that is indeed the case. For some names that is indeed the case. Do you plan to buy some Rocket Lab and SoFi today? I bought a little bit of Rocket Lab yesterday. Because remember, I sold 100 shares of Rocket Lab in June at $51 or so. Since then, I had bought back 75 shares under that price. And yesterday was the last, let's say, bunch, another 25 shares yesterday. So I'm back at my original share amount for less than what I sold it for, of course. And now we'll see. I said if we go and revisit maybe the 200-day moving average or a bit closer to 40, I will buy the next bunch. But SoFi, yeah, so I mean, if I'm looking at less of these, let's say, more speculative names or higher flying names, then yes, SoFi would definitely be one where I wouldn't mind adding. D-Local, I did buy yesterday a little bit more. Which was interesting because yesterday, yes, we were down at one point significantly more than the 6.8%, but there were quite a lot of buyers yesterday. It did rebound on that 100-day moving average, and today it seems like we're just going to drop below it. But I bought already a little bit yesterday. The market is going to open, so let's get ready for that, and then we'll go back to the question. Do you wish you had held more cash? Well, of course, I wish I had an insane amount of cash, but I still have some cash left. Yeah, still have some cash left to buy shares. So let's get ready to rumble and see what happens. So, ladies and gentlemen, ding, 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 bing, bing, bong, bing, bong. Market is open. Imagine if I had a cowbell, I'd have to sell the cowbell to purchase some shares. But ding, 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 market is open right now. And this is the heat map of yesterday. So wait a couple of seconds until we're seeing an updated one. Here we are on the watch list. On the watch list, it looks better than the pre-market one. It looks better than the pre-market one. I'll tell you that much. Nu is still the only name that is green, but I don't think it will hold on for. It will hold the green position for that much. It's going to be red or not? Yeah, it's red. Okay, it's red. It is red. Everything is red right now. And so let's Let's see what happens. So this is the market. Let's see. Nothing changed here. Where is NVIDIA? 2.4, 2.3. Okay. So we are seeing now some increases. So Applied Digital down 8, Iron down 6, Nebius down 5, AST 4.5, SoFi 27, so down 4.6, Marvell down 4, Zeta 4, AMD 3.8, Hood 4, Rubrik 2.7, BMNR down 4, NVIDIA 2.7, CoreWeave down 3.4, Intel 2.8, that one was down 4% pre-market actually. Google 2.5, Shift 4 basically flat, thank God. But then again, Shift 4 is probably really enjoying these prices because they do have a $1 billion share buyback program right now. PayPal is down another 2%. Insane. Palantir 2.7, Uber 2%, dLocal another 2.6, United Health 1.4. Okay, so you got your you got the little refresh here. You got the little refresh here. Nu is back into greenish. Micron down 1, Oscar 2.5, dLocal again. Duolingo flattish, Reddit 2.5, Amazon 1.8, and Rocket Lab 3, down 3%. That is. Meta is down 1.8, so we're just under 600, just under $600. Now let's go fly a kite. Now let's go back to the, where is it? To the charts and continue the conversation on some specific names. I'm actually looking if we do have maybe some news on one of the names. I don't think we have. We do have a lot of NVIDIA price target updates going into next week's earnings report, so that's interesting. That's interesting. Let's see here. Come on, refresh. Okay. No, nothing. Okay. Then we can go back to our usual stuff. To our usual stuff. Okay. The only green name now is Duolingo. Interesting. The only green name now is Duolingo. The one that is down the most is Applied Digital, 7.3. Then we have Iron here at, yeah, okay, same price as the pre-market, it seems. Nebius as well, although tiny bit of buying. Would be great if we can close above the 100-day here. Would be. Who's calling me midstream? SoFi is under 27. Okay, SoFi is under 27, but remember a week ago, literally last Friday, we were under 25, under 26, under 26. BMNR 34 should have maybe done it, but should have, could have, whatever. Hood 115 also under the 100-day moving average. Okay, interesting. CoreWeave continues to drop, though a little bit less than pre-market, but not by much. Some other names that are not margin call. Yeah, I mean, I think the margin call. It was my sister. I'll tell her she's the margin call. A good joke, guys. Usually I'm the clown here, but very nice, very nice. Okay, Figma. Ooh, okay. I didn't even notice this, but Figma is now under $40. Figma is now under Figma is now under $40. Okay, interesting. I mean, I'm surprised it went down so fast, but I'm not surprised with the valuation drop or adjustment here, because if you look at Figma, you look at Adobe, it's either Adobe goes up to match Figma or Figma does have to come down if Adobe doesn't move. Seems like the Figma is coming down. As for Dave, Okay. They've also started to come down significantly after an amazing earnings report, literally 2 weeks ago. We're back here at 200 and it touched basically the $200 mark. Okay, very interesting. Dave has been like a silent killer, very performing very well, performing very well. Sofa couch. Very good. Sezzle has now completely gone under the gap from 2 quarters ago. So here at $52, oversold as well. Oversold as well. Well, really a complete retracement here. What is this? Wow. 71% since the peak here. I don't know what happened here in July, but 71% since July for Sezzle. Mercado Libre, what is it? 2000 probably. Wow. Yes. Okay. Like the Jack Nicholson gif. Yes. $2,013 for Mercado Libre, still holding that huge uptrend line. Like it's literally perfect. Very interesting. Very interesting. Okay, this is probably one that I might want to get a bit more. Never ignore a call from a city. It can be important. It's not important. I know. I know why she calls. It's not important. Plus, I already talked in message. But yes, usually don't ignore family calls. Don't ignore family calls. But yeah, Mercado Libre here. If people want, I know it's very expensive. It's very expensive for one share. And we are seeing a little bit of buying action across the board. Still a lot of red, but less red than before. Maybe these therapy sessions are working. Maybe they are working. Rocket Lab is green. Indeed it is. Rocket Lab seems to be green, but then again, don't make any conclusions, right? Because maybe, I don't know, maybe an hour from today, it's like the little intraday dead cat bounce. Uber. Is Uber a buy now? Uber is a tremendous company. Uber is a tremendous company that generates quite a lot of free cash flow, but is also in this sort of investment cycle, right? With the autonomous vehicles thing, right? They told us, look, we're making investments. It's not expected to generate substantial profits for the business for the foreseeable future, which is normal. Uber, yes, I like it very much. And it's not even an expensive business. It's been at $90 since May, actually. Did go up and down, but it's been in this range for quite a while. They're working besides for PayPal. That is also correct. Maybe it's time for another tweet to Alex Chris. Accelerate the buybacks and maybe do some insider buying as well. Rocket Lab is green because of Blue Origin's successful launch. I don't know about that because that happened yesterday, right? But I don't know when yesterday. But yeah, Blue Origin, huge congrats to them and the team. Big milestone. Huge milestone, actually. Huge milestone. Thoughts on Alibaba? Okay, yeah, you're correct. I thought Alibaba. Where wasn't Alibaba supposed to report today? No, they updated it. Okay, so Tuesday morning, Alibaba. I still hold it. I still think it's cheap. And next Tuesday, we're going to hear from them a bit more. Sellout will start minutes before closing today. We still haven't reached the dip. I don't know about you, but I've just showed you for the last hour that stocks have crashed 20 to all the way to 70% over the past month. So A dip is a dip is really not that dip. It's more of a crash. Um, the fear and greed index to me is pure BS. Yes, now it's probably extreme fear, but remember, not that long ago, like one red day or two red days, and suddenly we switch from greed to extreme fear. It just doesn't make much sense. The AAII index, is a bit of a better, let's say, data to look at, I would say. But I haven't seen it today. Haven't seen it today. Micron is green. Micron is green. Micron is green. Probably on the report that Samsung is about to increase the prices of, I think, DDR5 by 60% or so. So if Samsung can do it, I guess Micron will probably follow suit. I think so. I think so. But yeah, Micron has been saving us, saving me actually. So huge performance here. So let's see. Okay, well, so we are getting some. Okay, I know you've asked a lot about circles, so let's. Ooh. Much better, much better. So circle is basically back to the IPO price. Basically back to the IPO price, which again makes sense. I made a video about circle a long time ago. Didn't make much sense. The valuation it was trading at. Of course, the stock did go a bit higher after the video was released. I'm not trying to be who, but again, it's one of those names where, in this case, okay, it comes down because it just the valuation made 0 sense. If interest rates are expected to drop, and I think they are expected to drop even more over the next 12 months, they are still generating the majority in interest income every well, depending on how many partnerships that they can form with other companies. Yeah, I mean, back at IPO prices, I'm not surprised. I'm not surprised. Nebius 85. Okay, okay. Nebius is back above the 100 days. So we are seeing a little bit of buying for now. CoreWeave, where is it? CoreWeave also a little bit of buying action here. AMD, same thing. Probably we're going to see, okay, 50-day moving average for Intel. Iron, also nice little green candle. We're red, but if it's green candle, then we are seeing some buying action. PayPal is, what is this, a hammer candle or something like that? I talked about Meta. Yes, I did. I like it. PayPal down still. United Health down. Hood is recovering now, back above the 100-day. The local, same thing here. Also perfect rebound, sorry, on the 100-day moving average. Meta still oversold here at $600 flat. Oscar also green candle, still down. The great Google down, but we're having some buyers here. Same for Palantir, back above the moving average. Marvell touched the 50, rebounded. Rubrik just under 70 again. SoFi also nice, now a lot of buying action here. AST also close to the 100, buying action. Zeta, same thing. It's quite crazy, right? You can see the pattern of a lot of these stocks. Where is Amazon? Yeah, Amazon basically closing that earnings gap. Shift 4, still a green candle. It is down, but we are getting some buying action. Same thing with Reddit. Same thing here with Nvidia, also above that 50-day. Uber also, although no moving average in sight. HIMS is still oversold a little bit. Could this be like the bottom candle? Maybe. Nu, I still go back to what I said at the start. Nu, if it was a green day, this stock would have been up significantly. Rocket Lab up 2.3, Duolingo up 1.2, and Micron 3.6. Do I think that Meta is a better buy? Meta is a cheaper buy than Google right now. I still love both of them. I own both. I still like both, but Meta is cheaper today than a Google. I wonder what Melly is doing. Probably also rebounding. Not by much. Not by much. Okay. What did I want to do? VIX. Yeah. Let's look at the volatility. What is it? 20? Yeah, 21. 21. Okay. 21. Yeah. I mean, it's literally been a week where last week we were also 22, closed out the day just under. Now we're back here. And then we'll see. We have to probably see the VIX go back down around these levels right here, 17 or so, for the market to chill out a little bit. Yield max investor Lift, you're asking. I know Lift took a hit. Not much actually. Okay. Just yesterday, but not that. Yeah, not that much. Not that much. We talked about Lyft at the start of the year. We went over the investor presentation, their goals, the free cash flow goals, and it was also one of those cheap, hated names at the start of the year. And this is also again a company that was cheap, but they executed quite well. And I think here, the first big earnings jump where they basically showed, look, this is what we're doing, this is what's happening. There were also some announcements, right? I think with Waymo, I think that was here. But yeah, I went with Uber, but Lyft, as I said in the past, and I'm not changing my mind, is a good company. And was a very cheap company as well. Was a very cheap company. Let's see Nasdaq 100 is supposed to rebound a little bit. Okay, so if we can close the day above 24,891, then we're above that 50-day moving average. Let's see what the S&P is doing today. Also trying to close out above. Well, close out. We just started the day, so we'll see what happens. But it seems like we're getting, quite a lot of buying action. SoFi is basically green. Iron is green right now. And the worst name is now United Health. Complete flip. Disney reported this week, right? Indeed it did. Indeed it dipped also. I did not. Okay, so yesterday it closed out the gap from 2 quarters ago. I did not have a look at their report. Let's see if I can find something for you. Some informazione. They're adding margin. Let's see if I can find something. No, not much. Not much. Let's see here what the report actually said. Let's see what the report actually said. Put on the AI summary so we don't have to read all of it. Just look at the main numbers. Adjusted EPS for fiscal 25 increased 19% year over year. Cash dividend $1.50, a 50% increase. Okay, nice for the fiscal 25 year. Direct-to-consumer business achieved a significant milestone, moving from $4 billion in operating loss 3 years prior to $1.3 billion operating income. Okay, yeah, man, it seems like streaming is a good business. Seems like streaming is a good business. Okay, the company is actively negotiating with YouTube TV. Okay, yeah, because I think they're losing quite a lot of money because of this. Seems like a good quarter. All in all. I just want to see one thing. Free cash flow was down, but there's probably a reason for that. This is fine. Where is the ARPU? No. System. Okay. No. So looked fine. Looked fine to me. look fine to me. Um, Man, my pleasure, and thank you all for joining. Again, therapy sessions is usually where there's a lot of people joining and asking questions. I enjoy doing this, but I would enjoy doing this when things go well, and uh, and we are seeing things go up. But it is what it is. For things to go up, we have to come down, right? Why do we fall, Master Wayne? Great comment. Um, okay, new new is this. This was the last quarter. Insane. This is just, I don't own it. I know I don't own it, but very good company. Very good company. Um, I think 13 Fs. I think next week is probably where everyone is going to release it. So I'll cover, of course, all of the super investors next week. So new reported yesterday. Again, this is a company that is doing exactly what it should be doing. Insane track records, insane execution across the board. Here specifically, Brazil. You can see what has happened over the last couple of years. The crazy, crazy company. Now, don't let the $16 per share make you think that this is still a $5 billion company. This is a company worth 75 to $80 billion already in market cap, but this is an insanely well-run company, like a Mercado Libre, but more specifically here on the financial side of things. Very, very good quarter, good execution across the board. Every segment seems to be doing very well. I am trying to look for that one slide where previously people were, where the market was freaking out here. Okay, here net interest margin did drop a tiny bit. There's probably an explanation for that. Here, I think it's this one. Is it this one? Yeah, I think it's this one. Yeah. So here as well, NPLs 15 to 90 for Brazil. Historical Q3 seasonality, less than 16 basis points. For the 90 plus, is up 16 basis points there. And we've seen that happen before. People were freaking out. They said, "Look, we know what we're doing. It's going to come down." That's exactly what has happened. Has come down now. This time it went up a tiny bit. Probably touched on that during the earnings call. But all in all, this is a company that, yes, has a core market, executes, expands in other markets as well. Some people will say, yeah, but they're also going to expand to the United States. That's extremely bullish, blah, blah, blah. Yes, but their core market, Latin America, is huge for them, and they're barely scratching the surface, looking at the total addressable or serviceable maybe market for them. Let's see what we have here for some questions. Yeah, okay, so we're getting a bit more green. Even Oscar is green for now. Back to $14. Shift 4. Yeah, Shift 4 has seen quite a lot of good days recently, probably because the company is just buying shares. It's just my assumption. It's not a fact. It's just me thinking out loud. Yeah, TMDX. Thank you for the reminder. TMDX, Transmedics, is also one of those names where it's stupid. It's cheap. The company, again, reported a very good quarter. Stock went up. Then it went all the way back down, below where they were previously before they reported. We are here also under the 100 and the 50-day moving average. This is a stupid, cheap company that is executing. Whoever owns this, you should be enjoying the pullback here. I don't own it personally. Again, I cannot add every single company that is cheap and that is attractive to me. Then I would have like 100 companies. But yeah, the Transmedics is a very good company. When, like, this is the downtrend line, couldn't survive, got pulled back down. But yeah, if you look at this company a year from now, 5 years from now, it's going to be worth way more than, what is this, a $3 billion company? 3? $3.8 billion company. If they achieve their goals of 10,000 or 20,000 transplants by, was it 2028, 2030 or something like that? Stupid cheap. Stupid cheap. You just have to be interested in this business. You just have to be interested in this business. What is the total addressable market for transmedics? I think they gave a number, but I mean the TAM for transplants is quite big. I think they gave a number because they're also going to add kidney. That's expanding it. I don't know the numbers by heart, but I think they gave a number the last presentation, if I remember correctly. Look, it's big. Like the transplant market, they're also expanding in Europe, so it's growing. It is growing. MDA Q3 results must be good. They reported MDA space. Again, I'm on the wrong tab here. Let's see. They did report a double beat. Stock is up 9% today. Okay. Stock is up 9%. Let's actually have a look because, yeah, this was one of those names that got pulled down, right? Because of SpaceX acquiring EchoStar, and then something happened with Global Star. I think that's the name. So let's see. Let's see if I can find something. Sometimes maybe good, sometimes maybe dude. Give up on Duolingo? No, I will not give up on a business that is going up and to the right. Okay. Just because the stock is down doesn't mean you have to give up on the business. Revenue up 45%, adjusted EBITDA up 49%, backlog $4.4 billion. Didn't really change that much, I think. The next acquisition, okay. EchoStar, okay, so EchoStar terminated the $1.3 billion direct-to-device satellite. MDA Space expects full compensation for termination costs. Okay, with discussions ongoing. Interesting. Defense market opportunity. The company maintains a $20 billion opportunity pipeline over the next 5 years, approximately $13 billion in satellite systems. Okay, and they reaffirmed their full-year guidance for 2025. Okay, so I guess, again, this is one of those names where probably much better than feared after this huge, literally 50% haircut. 50% haircut. I'm not the business owner. I am the stock owner. I am the business. Correct. I'm not the business. I am the stock owner. I am the shareholder. But you invest in companies because you trust management. ASTS. Did it reverse? Here. Yes, it did. Yes, it did. Nice little bounce here. Nice little bounce here on AST Space Mobile. Nice little bounce. Chime. Voila. This is a name we forgot to look at. Okay, so Chime after the earnings went back up. It did not stay above the 50-day moving average for that long. You invest in companies because I trust the stock to go up. Yes, but for the stock to go up, you have to trust that the owner of the business and the team executes, because the stock will not go up if the fundamentals are crappy. $1 trillion so far before GTA 6. At this point, yeah. At this point, GTA 7 will come out before GTA 6. That's for sure. That's for sure. The local, my opinion is still the same. My opinion is still the same. So good business, overreaction from the market. I bought more yesterday. Take rates. I don't know how many times Pedro has to repeat himself, but probably still a lot of times. Take rate will come down and will continue to come down slowly, but TPV is still expected to go up drastically faster than take rate coming down. It's just something that will happen, and that's part of the business. That's part of the business. Ah, yeah, Visa. Visa. Yeah, Visa and MasterCard. What has happened with them? What is this? The heck is this? Okay, this this is a bit better. I was like, what the heck? Morse code. Visa still 331, back to August, the bottom here in August. Okay. MasterCard is not such a difference. Two great companies. Two great companies. Am I playing GTA 6? Well, planning on playing. Yeah, probably. If it comes out, I don't even know how much it will cost. Probably the most expensive names out there. Wouldn't surprise me if they ask $100 for it. They can, and they'll probably sell out anyways. Well, you can't really sell out because they'll probably ask closer to $100. But I'll play it on PS5 if I have the space for it, because Call of Duty already takes up like 500 gigs of storage. Every update is like I need a new data center for every update. It's ridiculous. It's ridiculous. Yeah, we are seeing now a little bit of a pullback. Archer is probably one of those. I'll first pull up Joby just to be sure that we're seeing the same thing. Joby also, same thing. Peaked, well, not it peaked before, but here as well. Start of October, poof, down. Archer is probably the same. Yeah, exactly the same, just a bit more violent. Down 46%. I'll say the same thing I said before. The idea is nice. I just don't see it happen anytime soon on a large scale. Both of them, Joby or Archer. Purely because you have to think about it happening in your neighborhood or city or whatnot. Do you see these flying things happen near you anytime soon? Me personally, no. But yeah, maybe in Dubai or whatever, it's going to happen before. But okay, how many of these are going to fly? I don't know. VIX went from 50. What do you mean? From being up. Yeah. Well, it's still at 21 here. It's still high. Iron double bottom bear trap. Well, I think it's already under, no? Yeah, it's already under here. Like $50 was the double bottom. It went under. It's trying to go back up, but yet it might be a failed recovery, because even here, right, the stock went higher, RSI was much lower as well for iron. And we're seeing some buying action. BMNR looking interesting in my opinion. Maybe for a lot of people, yes. For me, there are plenty of other companies that look more interesting at current prices. The margin call was gold. Yeah, I mean the timing of that phone call was was perfect. The timing of that phone call was was perfect. Yeah, Bitcoin is not catching any bid today. And Bitcoin also forgot about this one. Bitcoin also topped start of October, also down 23.5%. 96,000. What is ETH doing? Probably the low. I mean, I guess BMNR can continue to buy more. Yeah, same thing here. 3,100. Do I think Oscar can revisit the April lows? Oscar. April lows. Oh, here. Yeah. Can it? It's still a significant way down, despite it being only like $2. It's still another 20%. It's quite a lot. It's quite a lot. Because again, business itself, if they achieve the $2.25 for 2027, it is quite cheap today, right? It's quite cheap today from a forward 2 years PE perspective. But sentiment around this is not good right now. But for it to go another 20% downwards, they'll probably have to maybe revise guidance on the downside, but we've just had earnings and comments were fine for now. Comments were fine. Did I sell CoreWeave for Nebius? I don't know if it's the right play. I don't know if it's the right play. I mean, I like Nebius more, of course, but I don't know if it's the right play. If you have a little bit of CoreWeave and you would like more Nebius, then maybe it makes sense just to consolidate. But for me personally, I'm not doing it. I'm not doing it right now. Grab would surprise if it's not at $5, right? Exactly. Still, thoughts on it? Still, my thoughts have not changed since when I covered it right here. I think it was the first time here. Good company, good execution. Just because it costs $5 doesn't mean this is in fact a $22 billion company. A lot of people keep forgetting that. I am a indirect holder of Grab through Uber, and that's good enough for me. Any names in the portfolio you're losing faith in or thinking of cutting? Well, I cut United Health not because I'm bearish, just because the cash from it is going to fund some other names where I think I have higher conviction. The other one is BMNR. I said it's anyways very, very small. I can just use that to maybe finance more CoreWeave or things like that. But all the others, no. The thing, I think I own good companies. Just the thesis is still the same. It's just the timing right now. But all in all, no. Other than those names, I think I'm still good. 8Co Holdings, yeah, that crappy thing is also down the gutter. Ooh, surprising stuff. No, it's not surprising at all. This is like the Dyna is pump and dump here. Not surprised at all. Not surprised at all. CoreWeave balance sheet looks like someone threw up on it. I mean, of course, the debt is quite high. Makes sense if you look at what they're trying to do. But again, if it works out, then again, this is a thing that they have to do. People just have questions on the execution and the revenue generating assets, right? The whole GPU depreciation question that we've talked about this week quite a lot. We've discussed it with Manuel after the local earnings call, right? We talked about the fact that, look, 3 years ago, ChatGPT came out. Only 3 years ago. Of course, over the last 2 years, 2.5 years, the GPUs that were being used by all of these big players are GPUs that have been used for everything, right? For every single thing, for training, for inference. And in inference, every time you say, hello, Gemini, or hello, Google, maybe a lot of your Google devices are not turned on. I don't know. Mine is not turned on for now. But every time you start talking, right, with those chatbots, previously, it was always the same types of GPUs that were doing the work. As we get new generations, yes, you're going to have top of the line GPUs that are going to be only for the best of the best training models and whatnot. And then you will have other older generations that will just be used for specific workloads, right? For really inference, text to text, right? Hi, how are you? Thanks. How about you? How can I help you today? You don't need a Blackwell GPU to do this. The fact of the matter is, Hopper are still being used. Those are 3 years old or something. A100s, according to CoreWeave, are still being used. Those are 5 years old GPUs, A100s. So in the future, yes, you are going to have, in my opinion, top of the line GPUs. So these companies will still have to buy new GPUs for the top of the top models out there for higher workloads, well, more compute heavy. And then you will have the older ones that will be able to do the simpler things. And so this whole question about depreciation is a valid question to be asking right now. But to say that it's going to be a fact that all of these companies that have put the depreciation period at 5 years, 6 years, they're lying and it's actually going to be 2 years or 3 years, you cannot say it's a fact. Because currently the facts are 3 years ago, ChatGPT came out. For the last 2.5 years, all of the GPUs, no matter which one you were using it for everything. Okay, companies like Google, Amazon, who am I missing here? Someone else. They have, of course, their own chips, custom chips for their own workloads. So they're already doing something different. But you cannot tell me that, oh, it's a fact. We know for a fact that GPUs are going to be, well, they're not going to be generating revenues for the next X amount of years, only for the next 2 years, and then they go to zero, they're broken, they're overused, they overheat, etc., etc. We don't know. It can very well happen, and then yes, the whole financing process of it is going to be an issue. But for now, I think it's too early to conclude. It's too early to conclude, I would say. Cooling science have made real advancements. Yeah, that also helps, right? That also helps. The whole way of building data centers, the whole way of building these huge GPU clusters is evolving to make sure that these things are going to be way more efficient. Again, this is also why I do believe that the investment cycles, that it's going to continue, because these companies would want to have the best generation out there, the last generation out there, the best solution out there, which means that the total cost of ownership will be better than the previous ones. We're talking about efficiencies here. But that doesn't mean that suddenly they're going to say, oh, you know what? All the other GPUs, let's throw them out. No, because I'm pretty sure that the other GPUs can be used for specific workloads, like simple things. They're going to be used. Of course, then the question will be, okay, how much can you ask for those GPUs, right? How much can you ask for the service? Because if the service is not going to be, okay, super high compute, very, very complex workloads, then the price will need to come down. And that's going to be the big question. Now, the big question is going to be, okay, now you can price them at a high level to repay all of your investment. But in a couple of years, if suddenly these GPUs are, let's say, 25, 30%, 40% less performing than the newer ones, then the pricing should go down significantly. The pricing goes down significantly, the repayment period will be extended. But hopefully by then, the repayment period is close to over. Moving to the next point, all of these companies, of course, are investing. Why? Because it's probably also making their core business, right? Where are they now? For a Meta, it's making their core business more efficient, more profitable. Advertising, same with Google. So it's already helping the business today. But yeah, for other companies, they will need to figure out product, services, apps that are going to be monetized for the X amount of years. The very popular names, right? The ChatGPT, OpenAI's, Perplexity, Anthropic, and all of that, they'll make the money through subscriptions, to licensing. And maybe they'll come out with some other solutions. And then we'll see. Then we'll see what happens. But people need to understand that 3 years ago only ChatGPT came out. And we know how stupid it was 3 years ago. So I think people are just looking for ways to find reasons for things to go down. I still think, yeah, that Tom Lee is correct in saying that this is the most hated bull rally or V-shaped recovery out there. I think it's just too early. I'm not making any conclusions, but I'm just looking at the companies. Companies seem to be making money. Some of them are already seeing some efficiencies thanks to AI. And so we'll see. And so we'll see. NeoCloud stocks dumping again. Correct. So it seems like seems like it was a intraday dead cat bounce. And the other non-NeoCloud name, which is PayPal, is getting hit because, well, I don't know why. It's getting hit because maybe they didn't mention AI too much, or maybe they mentioned AI too much, and that's why they're getting put in the same group. I don't know. PayPal is a very interesting case study for the future, but I do hope that they're buying back an insane amount of shares here. I do really hope so. Melee. It's like a British Melee. Still 2021 dollars. I agree with the GPU use case and depreciation schedule. Again, I don't know, right? It might be 5 years and not 6 years. Nebius, for example, is that it's still at 4 years. But that's not the issue for you. It's the 39% cumulative profitability of default on credit swaps, high debt to equity, and okay. Now we're talking about another topic, but yes, I agree. If we get a slowdown in the AI boom, they could just go down on financials. I do not disagree. I do not disagree with you. I do not disagree with you. VP of PayPal sold some shares yesterday. I don't know. Did it? Depreciation will kill the company, but the over leverage is the big danger. Well, again, depends on the company, right? If it's the big tech companies, they're very profitable, and I think they'll be fine. It's the not so profitable companies that are probably the issue here, or OpenAI. OpenAI is I guess the big issue. VP of PayPal sold some shares. I don't know if I've seen anything about it. would be bad if he did. Let's see. Not seeing anything. PayPal insider selling. Let's see. Yeah, no, I think I don't think we're talking about the big tech. I think we're maybe talking about the smaller players. I think we're talking maybe about the smaller players. So we did have some selling. Who's Webster? Aaron Webster. We have some selling. Let's see. He is chief risk officer. He did sell, but is it like a plan? Would be strange if it's like a planned sell. That would be very stupid. Yeah, he did sell a little bit. But VP, I'm not seeing a VP here. He sold shares 2 weeks ago, the VP. 2 weeks ago. That's also questionable, right? 2 weeks ago. Who is Christopher Natalie. Yeah, okay. That's yeah, but that's a weird one. What is this? He doesn't own any shares? $1,374 shares. That's it. So very strange, very strange form. This is the amount, direct. This is the price. Amount of securities benefit owned for, like he owns 0 shares. This doesn't make any sense. After he sold 1,374 shares, he owns 0 now. I think that's something doesn't add up. Something doesn't add up. But okay, yeah. But I mean, the thing with all of it, whether he has more shares or not, probably has more because this doesn't make any sense. The thing with PayPal is that if it's so cheap, if they have so much confidence in the business, right, buy shares on the open. Buy shares on the open. So yeah, but yeah, I agree that PayPal should definitely be buying more shares right now, and insiders should be buying shares on the open. And yeah, I know Chris and management team are new for the last 2 years, so they probably have huge packages, etc., etc. But still, you want to send a message, just buy. Don't have to buy billions in shares or millions in shares. Just make an open buy just to send a signal. I think it's good enough. I think it's good enough. So yeah, all in all, I think we can end it here. Yeah, so I almost have to go. I have to call my sister as well to see if this was not maybe a margin call. But yeah, anyways, all in all, not great. Not great of a week, I would say. There are some opportunities. I think there are some opportunities. Maybe the market will close up higher later today. Maybe we're seeing a intraday dead cat bounce. It's possible. It's possible. This is the heat map as we close out the therapy session. But to maybe summarize, is this. This is the year-to-date performance. Okay? This is the year-to-date performance. This is the 3 months performance. This is the 6 months performance. And this is the weekly performance right now on the heat map. Know what you own. Buy good businesses. Can it go lower? It can. It can also be the bottom. We don't know. If we knew, I think we would all be filthy rich if we knew exactly when the bottom would be. Do the arguments right now make sense? Why is the stock down? Is it because of macro specific things? Is it because of industry? Is it because of the business itself? Again, the beauty is we just had the earnings season almost over. Next Wednesday, Nvidia. They could make sure that the market does go back up, or at least provide us with some added information. But know what you own. If you know what you own, you'll feel way more comfortable buying during these ugly days, let's say. During these ugly days, maybe even ugly weeks. I'm not saying should go all in, because if you went all in a week ago when it was also red, you would be down significantly today, a week later. Now again, maybe last week was a price you were willing to pay. You don't care that you're down more right now, because a year from now, 2 years from now, 5 years from now, stocks are going to go up because you bought a great business at a good price. That's it. It's very simple. At the end of the day, it's very simple. Good companies, good prices, long-term vision, sleep well. Maybe that should be a t-shirt. But yeah, all in all, that's about it. I don't know if today, no, I don't think today, maybe tomorrow. I'll cover maybe specific names more in depth. I'll go over again, probably the local, because I only did a live stream. It was 3 hours long, so I didn't really have the energy to go and record a specific video after that. But do expect like an X amount of stocks to look at after the earnings drop or whatever, to go specifically over financials, not just the charts or the candles, but the financials to explain that the business is actually doing quite well. So all in all, that's about it. Yes, the portfolio video is going to go live as always on Sunday. Nothing to hide. Losses, gains, always every Sunday. There is a 20% coupon going on right now. If you do want to follow it on the day-to-day basis, you don't have to. You'll get it anyways free every Sunday. But if you want the instant notification, there is now a 20% discount on the yearly. But you do whatever you want. Have a great rest of your day, and of course, a great weekend. For those that want the stock market to be open on weekends, think again. Think again. Weekends should be for friends and family and actual relaxation, not to look at the stocks. Let's be honest here. Anyways, that's all I've got for you today.